Hello, and welcome back to our channel. Today, we're going to cover a sensitive but important topic: how to report a deceased spouse on your tax return. Losing a loved one is incredibly difficult, and having to deal with tax matters during that time can feel overwhelming. But don't worry, in this video, I'll walk you through the entire process step by step using TaxTron Web. The very first step is to file what's known as the final return for your deceased spouse. This return includes all income your spouse earned from January 1st of the year they passed away, up until their date of death. In addition to the final return, you may also file optional returns to reduce taxes owed. One such return is the rights or things return, which includes amounts your spouse was entitled to receive but didn't collect before passing, such as unpaid salary. For more details on optional T1 returns, please check the link in the description or pinned comment. The deadline to file the final return depends on the date of death. If your spouse passed away between January and October, the return is due by April 30th of the following year. If the death occurred in November or December, then the return is due 6 months after the date of death. You'll need to include all sources of income such as employment, pensions, CPP, and investment income, up to the date of death. Also, don't forget to notify the CRA by providing a copy of the death certificate. In the final return, make sure to report all income earned before the date of death. If you're transferring assets like registered retirement savings plan or registered retirement income fund, it's important to understand the tax implications. These transfers may be taxable unless certain conditions are met. For example, if you're a designated beneficiary, you will continue to file your own tax return as usual. But with a few changes, you can no longer claim the spousal amount unless you remarry or support a new dependent. Pension splitting, if applicable before, is no longer allowed after the death of your spouse. Now let's walk through a real example in TaxTron Web. Let's say your spouse, Sarah, passed away mid-year. She worked until May, received CPP benefits, and earned investment income. First, log into TaxTron Web. Go to the T1 Clients section, and either open an existing client or create a new one. Before proceeding, make sure your personal information is accurately filled in under the Identification tab. Set your marital status to widowed. Answer yes to, did your spouse pass away in 2024? Enter the date of death, for example, June 12, 2024. Then answer yes to, do you want to prepare your returns together? On the next screen, enter your spouse's details. First and last name, date of birth, social insurance number. Set marital status as married. Then complete your own address page and click Next. Now you'll land on your spouse's address tab. Here you must confirm that this is a deceased person's return and re-enter the date of death. Let's begin with your own income tab. Answer yes to, did you work in 2024? Also answer yes to, did you receive government pension? Check the T4AP tile, since Sarah was receiving CPP payments. After Sarah's passing, her spouse John receives the CPP Death Benefit of $2,500. This amount is reported on John's return, not Sarah's, using a T4AP slip. Next, switch to Sarah's Income tab. You'll notice the yellow background, which indicates you're working on the spouse's return. Answer yes to, did you work in 2024? Select T4, since Sarah worked from January to May. Answer, yes, to, did you receive retirement income? Check T4 RRSP, as John withdrew $50,000 from Sarah's RRSP after her passing. Answer, yes, to, did you earn income from investments or property? Select T5, since Sarah earned $3,000 interest income. Now click Next. T4A, P, on John's return. Enter $2,500 in Box 18, Lump Sum Death Benefit. T4, on Sarah's return. Box 14, Employment Income $25,000. Box 22, Income Tax Deducted $4,500. T4 RRSP, on Sarah's return. Box 16, Income Withdrawn $50,000. Box 30, Tax Withheld $10,000. Note: if John is a designated beneficiary, he may be able to transfer the RRSP into his own account, deferring the taxes. T5, on Sarah's return. Box 13, Canadian interest $3,000. Total income for Sarah: $25,000, employment. Plus $50,000, RRSP. Plus $3,000, investment, equals $78,000 total tax deducted. $4,500 plus $10,000 equals $14,500. Once you've completed the return, please note: since this is a deceased person's return, you cannot NETFILE it. However, a tax professional can file it electronically on your behalf. Otherwise, you will need to print and mail the return to the CRA. And that's it. You've successfully reported a deceased spouse in TaxTron Web, including income, pension benefits, RRSP withdrawals, and investment income. If you found this video helpful, don't forget to like, share, and subscribe to our channel. And if you have any questions, feel free to leave a comment below or contact our support team. Thanks for watching. And we'll see you in the next video.